Markets end lower after a volatile session, even as Asia and Europe recoup losses. Sensex trades nearly 300. Nifty barely clings on to 10,600.
Crude oil prices tumble over 25% from October highs, sending oil marketing companies, aviation and paint stocks on a gaining spree.
Rate sensitives move up on lower crude and receding inflation fears. Nifty Bank outperforms the benchmark indices, ending in the green by 0.5%. On the other hand, fears of a stronger rupee drives tech stocks downhill.
First signs in the battle between promoters of Yes Bank, the outgoing managing director Rana Kapoor says he's in talks with Madhu Kapoor and family for a mutual resolution. The stock perks up in trade. Dr. Reddy's, on the other hand, also surges over 6% as the pharma major wins a litigation on an important anti-drug addiction medicine.
Okay. Quality of select loans from NBFCs and housing finance companies worry the Reserve Bank. Sources say nearly 10% of the loans to builders may not be backed by project. That's an exclusive. Those were the top 5 headlines from Dalal Street. Hello and welcome to Markets Today Talkback. The show where we can tell you what happened in all those 6 hours of hectic trading in just 5 headlines. I'm Lata Venkatesh, and with me my colleague Prashant Nair. Hi Prashant.
Lata, hi. Pretty volatile and large ranges today through the course of the day. It looked like the market was sinking at one point. It recovered to being, actually almost flat. We came to being down just 30 points, and this was in the second half of the day, and the market collapsed towards close again, ending 50 points lower. As Lata said, over the next 30 minutes, we will tell about what happened in the market, the 5 stories. Our guests will answer your questions. And to answer those questions, today we have Prakash Devan and Ashwini Gujral with us. Gentlemen, Prakash and Ashwini, thanks very much. But as always, let's spend 2 minutes taking a quick look at how we started, what happened through the course of the day. Lata.
Well, it was a bit puzzling, actually, because we saw this risk-off starting from Wall Street spreading to Asia. But Asia actually started buying the dips. And Europe was in the green for a better part. That should have been a tailwind for us. As well, we had crude prices at, 25% off their October highs. That's a big boon for India, for all Indian macros. So we should really have done well. Done better than other Asian markets and perhaps as good as the European indices. But it appears that shares, after starting higher, continue to see persistent weakness, the Sensex and the Nifty, maybe exaggerated weakness in the tech stocks, but weakness nevertheless. So the only conclusion we can come to is perhaps there is a lot of resistance at higher levels. India has recently outperformed even the MSCI Asia. For the month of November, we are up about 5.8%, not counting today, whereas the other Asian indices are up between, 1 and 2%. So that outperformance probably now is finding resistance. A technical trader would tell you that the 200-day moving average at 10,750.60 is also proving to be a barrier. But the point is, things have gotten expensive in the last 6 weeks, and therefore there appears to be resistance at higher levels, even when we have so much of tailwind behind us in the form of crude. Incidentally, of course, that also makes banks attractive and ITs unattractive because it means a stronger rupee. But no, you drill it down to stocks.
I think there was somebody on social media, on Twitter, who said that we are in liquid oxygen right now. It's a takeoff. Okay. Let me get this right. Oxygen is oil prices.
Yes.
And liquid is the Dow, the US.
Right.
So, I think that's a nice way to put it. The confusion, which is very much evident. But one characteristic over the last two days, yesterday and today, is that the weakness doesn't seep in right at open. Right at open, it looks like you come up, you wake up with a large cut in the US market, and till about 10 o'clock, 10:30, it looks like the market's just shrugging it off. We're down, barely down, given the backdrop.
We were in the green.
We were in the green. And then the weakness starts to seep in slowly but steadily. And I think that's exactly what happened. So pain points sectorally, the IT index was down 3%. The energy index was down 1.5%. We had the metal index, which was down about 0.8%. So that's basically the pain points. Look at what was up today. Sectorally speaking, pharma was up, PSU banks were up, and we had the mid-cap index, which did just fine. Okay, so big technology. I mean, actually, it was all tech. Large cap, mid cap, everywhere you see in the technology space, it was red. TCS, Infosys, Tech Mahindra, HCL Tech, Wipro. The first 5-6 top Nifty gainers were all technology names. There were other losers as well in the Nifty. Tata Steel was down, Bajaj Auto was down, and Reliance was down about 2% as well. A few gainers, Dr. Reddy's, we mentioned that as part of our headlines. Grasim and Yes Bank, which was also mentioned in the headlines, 3% is back to near 200 levels. As I said, mid-cap techs, Emphasis, Cyient, L&T, Infotech, and there were many others, but that's just a sample given what happened. Broader market gains. I mean, actually, for the collapse we saw towards close, the market breadth wasn't bad at all. So, lots of stocks jumping on decent volumes. To begin with, DHFL reported numbers in the second half. The stock ended about 4.25 higher. Vodafone Idea, 5.25 higher. DLF is back above 180, 4.5 up. Adani Gas saw a pretty large move, large volumes as well. Philips Carbon was up about 9%. There was Dalmia Bharat, Gati, Kesoram Industries, Minda Corp. I could go on, but limiting to the heavily traded names which were up as well. Lata.
Okay, therefore, there could be a person who looks at mid-cap space saying that today was actually a green day because it was 1:1 advance to declines.
Yeah.
The Nifty Junior, the mid-cap index and the bank Nifty ended higher. So there is a legitimate point to say that it was not all that lower and that we were moving higher like Asia and Europe did. Well, let's find out what our guests have made of the markets. Ashwini, first your thoughts on the price action today?
See, basically, you had a down day yesterday. Now, the Nifty didn't quite recover, but the bank Nifty recovered. So that way, like I said in the morning, 10,550, 10,750, the sort of range. Now, in a sideways market, it's very tough to extrapolate that because today bank closed at the highs, tomorrow also it will do that. So my sense is for the moment till we find enough triggers, 10,550 should be a buying zone, 10,750 should be a selling zone. Overall financial to outperform, but not in the sense that you start chasing up or something. Just that markets remain sideways and probably just get an opportunity to.
Okay, Ashwini, so tighter and a smaller range now is what Ashwini is pointing to. Buy the lower end of the range and you get out of the upper end of the range. Well, we move on to the second story, the second big headline, which is the big fall we've seen in oil prices. I mean, we had that big 6% fall in oil prices overnight, which leaves us 25% from the October highs on oil. This sent crude-sensitive stocks on a gaining spree. We had oil marketing companies, paint companies, airline companies, all which ended higher. But mind you, all these gains were chipped away at. Stocks started up 8% in some cases, 8% higher in some cases, ended up 2-3%. Airline stocks were up 4% in some cases, ended up 1.5%. So by close, even the crude sensitives, the oil sensitives also gave up some of those gains. Manisha is here, though, to talk about the underlying, which is oil prices and the big factors, the dominating drivers for oil. Manisha.
Well, it continues to be very, very volatile for the crude oil prices. After 7% down in the New York session yesterday, we've seen nearly 2% of gains coming on the space now. And with the US shut because of the Thanksgiving holiday, it is going to be lesser volume, exaggerated moves. And that only tells you that the volatility is going to be on the higher side. Well, there are lots of factors at play. We, of course, are looking at higher supplies. The global equity market's quite slippery, and the sell-off therein also has been weighing. The global demand scenario, the growth therein, that also has been revised on the lower side, is weighing onto the prices. And we're just about holding around those 63 kind of levels for the Brent prices. The expectation is that $60 per barrel is going to be quite a strong support there, a floor there. You wouldn't perhaps see the crude oil prices decline below that. One, of course, is that the OPEC and allies will try and put some kind of an output policy for 2019. But before that, it is the OPEC members and the allies itself who have been increasing supplies. So when you look at the OPEC output, it's at the highest since 2016. Saudi Arabia has been increasing output as well. And the markets are anticipating that for the month of November, it's going to be at 11 million barrels per day before they cut 500,000 barrels for the month of December. So they have been increasing supplies, and on that increase, they would cut the output. So the markets really are trying to read into a lot of numbers that we are seeing right now. But there is some bit of a bargain buying that we've seen on the lower side, and markets do anticipate it is going to be quite volatile until that 6th December OPEC meeting is out of the way and there is some kind of a consensus that you've heard from the major oil producers.
Okay, thank you very much for that backdrop. So December 6th is the date to watch for the Vienna meet of the OPEC. But a crude price fall spawns many winners in India. One of them were the paint companies, and we have a question coming from a viewer on Berger Paints. Hemant Kumar from Bangalore has written to us. He says he has been holding 100 shares of Berger Paints, purchased at 300 rupees a share. He wants to know if he should hold or sell. Prakash, your thoughts first.
No, so I think I'm glad somebody's asked a question on paints and not on the OMCs or the aviation stocks, because the impact on paints is far-reaching and slightly longer in terms of the favorable effect that could last. Given the fact that usually paint companies do not have to pass on the advantage of a lower crude price to the consumer every now and then. We don't see paint prices getting changing on the retail end very frequently. In fact, we've seen a hike sometime in the month of September, which has been in place, about 5% most leaders have taken. And Berger also has reported very decent numbers. There's volume growth, which is probably, questionable in terms of the season being slightly slack. But going forward, the next 2 quarters could probably be much better. And I think the advantage of softer crude will definitely start kicking in on the bottom line. So stay put. I mean, you're not very far off from your purchase price, but probably a decent number to look at would be about 360, 365, where you could look at booking profits if you don't want to continue that journey in the stock.
Okay. Ashwini, how would you trade Berger? I mean, what would your advice be?
See, now again, long-term investment, etc., is compounding. This is a cyclical stock, and as you can see, when crude prices are high, it tends to go to 250, 260, and then over a period of time, when over, it goes back to 350. So you have to be able to play these cycles, and if crude goes back to 80, chances are Berger Paints will fall back to 250, 260. I think for many years it has not crossed 350. So the cyclicality plays out. Just mark down averages and to play the cycle of the main commodity.
Okay, that's the advice on Berger coming in from both Prakash and Ashwini. We move on to the third story of the day. Rate sensitives too moved up on lower oil prices, receding inflation fears. The Nifty Bank outperformed the benchmark indices, ending over 0.5% in the green. Axis Bank and SBI led the gains, and fears of a strong rupee drove technology stocks downhill. Nifty IT was the top sectoral loser. As I said earlier, Infosys, TCS, HCL Tech led the pack. The large cap stocks lower. The mid caps also saw a fair bit of selling. Lata, what's your sense? I mean, the impact on macros, inflation, rupee, etc. I mean,
well, I think the grammar has changed. When the Reserve Bank met on what was it, October 6th or no, was it September 6th? At that time, we were looking at crude, climbing from 75 towards above 80. And therefore, you had a policy of calibrated tightening. But in the past 6 weeks, that whole grammar has changed, and you are seeing, the inflation trajectory likely very different. At that time, the expectation was there's food disinflation, but there is going to be fuel inflation. But now, fuel inflation also is diametrically opposite. So the expectation in the market is that that's going to lead the Reserve Bank to lower its trajectory of year-end inflation, March 31st, and 1 year ahead inflation, which will mean that, there is scope for some action. Even if the Reserve Bank doesn't cut immediately because it has just gone into a monetary tightening, calibrated tightening stance, it will at least want to revise its inflation target, and therefore yields will climb down. And likewise, if both crude is cheaper and the rupee is stronger, then you're going to have an even better impact on inflation. So that's why you saw this huge buy banks and sell IT trade. Currency was quite clearly off because where was the 3% current account deficit that everyone worried, and now with crude at closer to $60, that automatically comes down to about 2.5% of GDP. So the worry on the rupee is practically non-existent. And that, of course, was bad news for the IT stocks. Of course, how will RBI keep all this sample liquidity is another question. But that's why, the banks are rallying, because the expectation is that for separate reasons, Reserve Bank will also keep the liquidity plentiful through open market purchases. So everything was going good for the banks and not for IT stocks.
Well, we've got a question. George Varghese is calling us from Kochi with a question on IDFC Bank. George, go ahead. What's your question?
Good evening, Prashant. Can you hear me?
Yes, clearly. Go ahead.
I bought this at $68 in January or February of 2018. Okay.
Okay.
Today it is 35, and on a standalone basis, this is a share with 44 or 45 rupees book value. And CASA is 13.5% today. Standalone is 206 branches as on today. And the person who's going to take over is one of India's best bankers who has his feet on the ground. He's had such a distinguished tenure in ICICI. And can you give me one good reason why it is languishing at 35? Number two, conservatively, what should you do? And as per the law, within 60 days from the Capital First shareholders meeting, which is December
yeah, point taken, sir.
So conservatively, what should it put in March 2019?
Mr. Varghese, so you're extremely well researched. Great to hear that, and you, in a way, made up your mind. You're looking for evidence, any evidence to the contrary, and that's a great way to go about it. So let's put this to our experts. Prakash is here with us. Prakash, you heard Mr. Varghese from Kochi.
I fully, I can understand his angst at why the stock has not delivered all this while. And the simple reason is that this was one structure that was compelled to get into the holdco structure when IDFC decided to go into those banking operations. And somewhere that, that structure has cost it quite a bit in terms of, additional capital, which hasn't been very productively deployed. So, once this merger is done with, there's a potential collapsing of that holding company structure itself, where IDFC sells off rest of its parts and only becomes the bank itself. So there's only a uniform structure or a single entity that is part of the banking business. So when that happens, it could probably be 6 months away, it could be 9 months away. That is a time when you will at least get book value plus. Even if you get a 1.2 times book value, you will probably be close to about 53, 54 bucks. So that's the fair value that it could go to. So the best is to buy more shares if you want, since you have that faith and conviction, you waited all this while. Or if you don't want to put more capital behind it, wait for that period and you would probably start realizing that kind of value.
Okay, there you are, Mr. Varghese. It's perhaps only a question of waiting it out till the merger happens and the share begins to trade at 1 time book and more, maybe 1.2 times book. The only problem with the merger could be that neither of them bring a liability franchise. Both of them have asset books. IDFC inherited a little bit of assets, but it's not been able to break the branch and deposit formula. And for all the capability of Vaidyanathan, as an NBFC, you are only able to get a very good asset franchise. Liability, you're still dependent on the wholesale market. So, therefore, a resistance of the market to give them more than 1 time book till they prove their spurs.
Questions, giving answers. And as always, we are wrapping up what happened in the day today. So we got through 3 headlines. Here's the 4th one. Stocks that were in news today. of course, has to be Yes Bank right on the top of the list. The stock ended over 3% in the green. Big movement this week, 7% up on Monday, 7% lower yesterday, and a bit of a rebound today. Remember, the bank now says that talks are underway between Rana Kapoor and co-promoter Madhu Kapoor for mutual resolution. We had earlier reported that both families have withdrawn unreasonable demands, and a reconciliation is likely by the end of this month. The other big name today was Dr. Reddy's. This surged over 6% as the pharma major won a litigation on an anti-drug addiction drug, Suboxone. Lata, we got questions.
Yes, Hemant Kumar from Bangalore has written to us with a question. No, not Berger Paints. We're finished with Berger Paints. We should be having the next question up. Yes Bank. Okay. Hanumanta Reddy is the guy, and he's got Yes Bank shares of 220 numbers purchased at 270 rupees. Oh boy, sitting on some losses. Prakash, how will you console this man? Should he hold or sell?
No, so I think any kind of a move on the upside, he'll have to do a little bit of a trade in and out of sorts to bring his losses down or cut his costs down. The first thing you would have to do is, on a day like this, you would have to move out. And as Prashant said, we've seen this stock give you those opportunities on both sides. So whenever it's probably lower, he could add up. I know it's tough for a long-term investor, but if he doesn't want to touch the stock, and he's willing to bite the bullet, he would probably, sit out of this trade completely by booking this loss. Because I don't see 270 coming very quickly, at least till April, till there's some clarity in terms of leadership and how RBI accepts the new incumbent and, lets business be back to usual.
Okay. Thanks a lot for that. Okay, so tough time if you have bought Yes Bank so high. And the last headline, sources close to the Reserve Bank tell CNBC TV18 that some loans given to builders is sparking concerns in the central bank. CNBC TV18 learns that nearly 10% of loans disbursed by NBFCs and housing finance companies to builders may not be backed by projects on the ground. Earlier today, we spoke to Yashpal Gupta of Repco Home Finance, and he says that housing loan disbursements by many HFCs have slowed down or stopped, probably because some of those loans were to builders who are now in stress.
We are hearing, at least in some geographies, even the housing loan disbursements have been slowed down or stopped. Hoping or rather estimating is that going forward, at least for some time, there may be a little slowdown in the market, and that is why most of the book growth of the companies is happening by takeovers. In fact, if we look at industry-wise data, about 9% of the book every year is taken over by others.
Okay, actually, you could hear more about that, but the short point from Repco is that there are a lot of troubled assets. Agreeing with what Reserve Bank sources told us, that some of the builders and the NBFCs don't face a liquidity issue, but an asset quality issue.